going to show to you how to perform a top-down analysis in Forex market with smart money concepts and why it's one of the best way to analyze the market and find high probability setups. By the end of this video, you'll be able to apply this technique to any currency pair in any time frame and improve your trading results. But before we get into that, let me tell you what a top-down analysis is and what smart money concepts are. A top-down analysis is a trading approach that starts with a larger time frame such as the daily or the weekly charts and then drills down to the smaller time frame such as 4 hour, 1 hour or even 1 minute. You look for the main trend, support and resistance level, price action patterns, indicators and other tools that can help you to assess the market condition and direction. You repeat this process until you reach your preferred trading time frame, where you look for your trading setups. Smart money concepts are based on the idea that there are big players in the Forex market such as banks, hedge funds, institutional investors, and market makers who have a lot of influence and power over the market. They are able to move the price in their favor by using their size and liquidity. They are also able to manipulate the market by creating false signals or traps for retail traders who follow them blindly. Smart money concepts is a trading strategy that aims to identify what a smart money is doing in the market and align you and your trades with their direction and momentum. It involves using various tools and techniques to spot where smart money is entering and exiting the market, where they are placing their orders, where they are hiding their stop loss, and where they are creating liquidity pools or zones of interest. By using a top-down analysis in the Forex market with smart money concept strategy, you can trade with the flow of the market rather than go against it. You can avoid falling into traps or false signals that are set up by the smart money. You can also increase your confidence and conviction in your trades, knowing that they are backed by solid evidence in multiple time frames. So, how do you perform a top-down analysis in the Forex with smart money concept strategy? Well, it's pretty simple actually. You start with larger time frames such as the daily or the weekly chart and look for clues that indicate what the smart money is doing in the market. Some of those clues are trend. The trend is your friend until it ends. The smart money usually trades in the direction of the dominant trend of the market. They use pullbacks or retracements as opportunities to enter or add to their positions. They also use trendline or moving average as dynamic support or resistance levels to guide their trades. Supply and demand. Supply and demand are horizontal levels or zone where the price trends to bounce or reverse. The smart money use these levels as area of interest where they can place their orders or hide their stop losses. They also use those levels as targets for their trade or exit points for their positions. Price action patterns. Price action patterns are formations or shapes that reflect the psychology and behavior of the market participants. The smart money use these patterns as signals or triggers for their trades. They also use these patterns as trap or false signals to retail traders who follow them blindly. Some of those patterns are double top or bottoms, head and shoulders, triangles, wedge, flags, pennants, etc. Indicators. Indicators are mathematical calculations that are applied to the price or volume data on the market. The smart money uses these indicators as tools or aids for their trades. They also use indicators as confirmation or divergence signals for their trades. Some of those indicators are moving average, MACD, RSI, stochastic, etc. So now that you have established what the smart money is doing on the larger time frame, you move down to the smaller time frames to look for trade setups that match your criteria. That's how you do a top-down analysis. You look for entries that are in the line with the trend and momentum of the market. You look for exit points that are based on supply and demand level or price action patterns. You look for a risk management that is based on your risk-reward ratio or stop loss placement. Let me give you one example of how to do a top-down analysis in the Forex market with smart money concept strategy works in practice. Let's say that you want to trade GBP USD pair on 1 hour time frame chart. Instead of jumping straight into the chart and start to looking for trade setups, you first look to the daily chart to see what's going on the bigger picture. Let me show you. So right now we are on the GBP USD chart on the weekly time frame, and I will show to you guys how to perform a top-down analysis from the weekly time frame till the 1 minute time frame here on GBP USD chart. Okay, first thing we need to do is to pay attention to the structure and who is controlling the market, the supply or the demand. In this scenario for us, it's clearly that we had a supply level right here that got flipped. So we had actually in the past a break of market structure, or more specific in this scenario, a shift or market structure. I use SMS to identify those type of moves. Okay, so after this shift or market structure, we can see clearly, okay, that the price is right now on a bullish trend. So price was on a bearish trend and we changed it to a bullish trend. Okay, if you are right now on a bullish trend, we made this bottom right here and then price start to rise again and we made this top. We can expect at some moment that price will retrace till this demand level, and when it retreats to this demand level, we can start to look for entries again. Another thing that is also important to have in consideration in this scenario is this fair value gap right here. This fair value gap, we need to pay attention to it, because maybe price can fall and don't respect this demand level to create what? I already told you guys in the video. Traps for as retail traders that follow smart money concept or chart patterns blindly. So we don't want to do that. We don't want to follow these signals blindly, right? So we need to pay attention to that. Price can maybe create a trap right here, you know, some liquidity here, grab the liquidity, tap on this imbalance zone and then rise again. Okay, this is from the weekly time frame what we can see. Then of course we have this bullish demand zone right here, bullish order blocks we prefer to call this way. And of course right here we had this break of structure. Okay, we can see clearly that the weekly time frame is bullish. We had some little retracement on the past week on 8th of May, right? The week of 8th of May. And right now price is trying to go up again. So okay, we can see clearly that the weekly time frame is definitely bullish. What about the daily? The daily time frame is a little bit different. As we can see, the daily time frame is already bearish, probably to retrace till the demand level of the weekly time frame. As I told you guys in the video, smart money concept traders take trades when price is doing pullback, or they end position when price is doing pullback. And I even draw this for you guys on the chart. So something like this, demand zone, price retreats, we take the entry and then price rise again. Okay, so maybe that's exactly what's happening right here with the daily demand zone and the weekly demand zone. So the daily demand zone already failed, so we had a shift on market structure here. Price is right now bearish and try to retrace. Maybe we will respect this supply level and then retrace to the level. Or as I told you guys, we may have a trap right here and price we will tap on this fair value gap zone and then rise again. But we can see signs just from the weekly and daily time frame. We can see clearly that price is right now bearish on the daily time frame. So the daily time frame it's going down, and on the weekly time frame it's going up. Okay, so the daily may retrace to the demand zone of the weekly time frame. But just to make sure we understand everything very well, right here we had the shift on market structure on the daily time frame, and now price is retracing maybe to tap on this zone right here, that is a order block zone or supply zone. So now we can go to 4-hour time frame and start to even retrace this zone even more, maybe just to this candle. It's still the same, doesn't change anything actually. And we can see that 4-hour time frame, we have the shift of market structure, but I would bet actually that this is a trap that the price is created, the smart money is creating right now to what? To trap retail traders that follow those strategies blindly without thinking too much, without having a second level thinking, okay? Then on 1-hour time frame, now we can start to refine this a little bit more, maybe not at all this huge green candle still validating this as our supply zone, but from here we can start to look even better to this liquidity grab happening, right? So price drop it so fast, grab the liquidity on these lows, grab all the liquidity here, fill this fair value gap. You can expect price to retrace, grab the liquidity on this top also, and maybe give us a entry trigger confirmation right here that we will be able to take a short trade, let's say in this scenario, and hold it till the price retraces to this weekly demand zone, or even swap this demand zone and tap on this fair value gap. So for those of you who are captivated by the allure of day trading and want to embark on this journey to financial independence, I am excited to extend a special offer for you. My personal mentorship. This mentorship helped over 1,500 traders become profitable and start to actually make money from the market. I will teach you the same strategy that I used to trade and make thousands of dollars in the prop firm premiums. So, as an experienced trader myself, I have encountered ups and downs of the market and have created valuable insights along the way. So through my mentorship, I aim to share my knowledge, strategy, and practical advice to help you navigate the complexities of day trading and increase your chance of success by 100%. During my mentorship program, you will gain access to a wealth of resources including personalized coaching sessions, educational materials, real-time market analysis, and ongoing supports. Together, we will dive into my trading strategy, risk management techniques, and psychology aspects of trading that can significantly impact your results. So, if you are new into trading or you are a trader but just can't get consistent results and want to change your financial life and start to make money every single day from the market, I will be there to guide you, answer your question, and provide valuable feedback to help you sharpen your skills and develop a trading approach that aligns with your goals. If you are genuinely committed to learning the art of day trading and are prepared to put in the work necessary, I invite you to join my mentorship program. Together we can embark in this exciting adventure and empower you with the knowledge and skills to navigate the markets and achieve your financial aspiration. Check the first link in the description and book a call with me so we can talk if you have interest. Check the video that is on the screen right now. If you have any question or comments, please leave them below. Thanks for watching and have a profitable trading week.